Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, as usual, I'm very grateful for life, of course, and very excited to be with you here this morning as we are going to be taking another fresh new look at the financial market. Well, the last 24 hours, as we begin to see the influence of the crisis in the Middle East creep in on the chart, as every time we have a breakthrough, we begin to see some setbacks as participants continue to be in this phase of uncertainty around the whole latest development across the globe. So, from a technical standpoint, we are going to be dissecting the current market structure this morning to see how we can manage our existing position and, of course, use the information we are able to come up with on the chart to strategically position ourselves ahead of the London and the New York session today. Well, for those who are with me on both my TradingView and Telegram platform, you must have gotten an update this morning as to how we are going to be managing our existing positions. And of course, we are going to be looking at that in a moment. Well, in preparation for today's trading session, as usual, I have conducted a comprehensive analysis of the assets on our watch list using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights into the historical price movement of these assets on our watch list. Well, since the beginning of the week, we have been monitoring three major assets, which includes the US oil spot, the GBPUSD, and of course the XAUUSD. And in a moment, we'll begin to run through the details on that one. But I would like to appreciate our newcomers in the house. For those who are joining us for the first time, you're highly welcome on board, and I'm very glad to have you around with us this morning. Well, you might be asking what is going on here. Well, as technical traders, we gather here on a daily basis in anticipation of both the London and the New York session, where we come to review our existing position if we have any, and of course position ourselves ahead of the New York session and of course the London session. This happens on a daily basis, 9:05 a.m. WAT and 8:05 a.m. UTC. So I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. So once again, you are highly welcome on board. So with that being said, here we will be diving right into the business, and as usual, the first thing we usually do is to run through the economic calendar so that we can keep tabs with these fundamental factors. And of course, we know that these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any of this potential move prior, during, and even after this event. So on the economic calendar, we usually focus on high impactful event from the economic dockets that affects the assets on our watch list. And for this week, based on the assets we have, we are going to be focusing on both the United States and of course the United Kingdom's economic docket. So in this regard, we shall be excluding all the other economic dockets and just focus on the United States and the United Kingdom. And in terms of the strength of the impact, let's streamline it to the medium and impact and high impact events. So let's click on the apply filter, and we should be seeing what we are going to be looking at for today. So for today's trading session, indeed we have a series of um, medium impact event and only one high impactful event, which is the first chairman speech, which is coming up much more later in the day. I think in about 8 to 9 hours is going to be giving a speech. Then besides this, we have a couple of medium impact events. In fact, it's a handful of them actually. As you will see here, the first one is coming in about 4 hours from now, and that is the initial jobless claims from the United States economy. Now, this is an index released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurance. Now, in other words, it provides a measure of strength in the US labor market, and a larger than expected number indicates weakness in the labor sector. And of course, this will generally affect the US dollar. So a decreasing number should be taken as a positive signal for us on the US dollar. Now, if we look at the data here, the previous data for the month of September came in at 209,000. Now we have a consensus projecting 212,000, and this is a little bit on the high side. So there is a sign that the labor sector might have witnessed a contraction in the last 1 month. So we want to be looking at how the market is going to be anticipating this event, and of course during the event and after the event. Then we have, within that hour too, we have the Philadelphia Fed manufacturing survey, and this serves as an indicator into the manufacturing sector of the United States. And of course, if we have an above expectation reading on this one, we should be expecting a positive figure for the US dollar. Now look at what we have here for the previous month. We had a minus 13.5 index, and we have consensus projecting minus 6.6, which, as we have a little bit of growth, but it's still on the negative side. So we're looking forward to what the actual data is going to be like on that one. Then besides this, we have a handful of speeches coming up today. We have the Jefferson speech, we have the Goolsbee speech, we have Bostic, we have Aka, and we have Logan. So all of these people are officials of the Federal Reserve, and of course whatever they say is going to be having a major impact on the economy and of course on the sentiment in the market. And one important thing about these speeches, especially that of the Fed chairman, is the fact that whatever he says today is going to be having an influence over the financial markets, and his remarks will provide us with insight into the central bank's outlook on the economy, potential policy shifts, and of course interest rate changes, probably decisions for the nearest future. And this in the long run will be impacting trading decisions and market sentiment as well. So with all the information we have gathered here on the economic calendar, we will be delving into the charts to look at things from a technical standpoint. And one thing I usually emphasize here is that as technical traders, the anticipation of this event alone has a tendency of influencing market sentiment, which in the long run will dovetail to the movement of price action. Now, talking about price action, the first asset we are going to be taking on today is going to be the US oil spot. And this whole thing is happening again as I'm finding a freeze here. So let's wait for the chart to load up. All right, so here we go. So here on the US oil spot, we've already been taken out of all our buy positions based on the current situation going on right now. And in fact, for those who are with me on both my Trading View and Telegram platform, I did give an update this morning as to how we are going to be managing our positions here. Now, oil prices appear to be doing some retracement of their gains after 2 consecutive days of upward movement, which we of course took advantage of. And well, there is this general belief that this pullback that we are currently witnessing could be attributed to the US Venezuela deal, indicating a potential increase in global oil production, which of course will increase the supply. And when there is an increase in supply, definitely price will be crashing to the downside. So is it going to be the case in this scenario we are currently witnessing? Well, let's look at the current market structure from a technical standpoint to decide what our next line of action will be. Now, right here, at the beginning of the week, it was more of a consolidation phase. Remember, we initially had a price confined within a range that was between the $86.60 level and of course the $85.90 area, which emphasized the level of uncertainty that was going on at that point in time. And of course, you know how we do it. Whenever we have this kind of setup, we do want to be exercising patience, waiting for either the breakout of the resistance line or the breakdown of the support line to give us an opportunity to trade. And remember that we did had a buy position triggered at the beginning of the week after price did break out of that resistance line, and in fact we saw price move about 40 pips thereabouts before the bearish momentum took us out of that position in a loss. So we started the week on a negative note before we witnessed that breakdown of that support line of that range to inside a bearish momentum, which in fact gave us a considerable amount of a minimum amount of profit, or at a worst case scenario break even, depending on where you put your stop loss to. Then during the Tuesday's trading session, we acknowledged this buy pressure that we noticed around the $85 area, and the inability of sellers to break through that structure between the Monday and Tuesday trading session for us was a sign that we might likely be seeing a bullish momentum from here. And one of the things we did on Monday was, on Tuesday stroke Wednesday, was to position ourselves above the $85.90 level. And of course, we did had a buy position triggered there, and price moved about 260 pips in our favor before the bearish momentum began, and the second position also moved over 190 pips in our favor before the bearish momentum came in. And this morning I made mention here that the ascending trend line here will be playing a major role in determining the direction of price action today, and this simply means that as long as price remains above that ascending trend line, we shall feel comfortable in the buy position. However, things have become a little bit moving towards the bearish direction here, based on the fact that we finally saw the breakdown of that ascending trend line for the first time, let me say, for this week. And for in that regard, we're looking out for selling opportunities below the $86.60 level. And if you are taking advantage of that, well done to you for being on standby to capitalize on this move. However, if you had missed out on this opportunity, then I will be encouraging you to exercise patience at this juncture, as let's see if the market will come back, do a retest of that structure to incite a downtrend continuation. However, for those who had already taken advantage of the breakdown of the $86.60 level, I will be advising you to move your stop losses accordingly. Move your stop loss to the entry point right now. Let's secure it at the entry point, and let's wait to see how the market will be playing out from this area. So if it comes back to retest the structure, then continued selling pressure on our lower time frame will be all we need to confirm that we are going bearish. So let's see how the market will play out here. Then remember that we also have the $85 area, which happens to be our key level for this week, and we want to see how the market would react to this level one more time. Again, remember at the beginning of the week it was more of buy pressure around that area. So let's see if the market will be breaking through this structure at this point in time. So, in that regard, we shall continue to monitor price action. So if you have any questions, feel free to let me know in the comment section. So I will be giving you updates in the comment section of both my TradingView and Telegram platform if anything new happens here. But at this point in time, everything is looking very bearish. And to further emphasize this, we need some trend lines to work with for today's trading session. So after connecting the series of lower highs, we have something like this to work with. So I'll just give this a red color and thicken it a little bit so that it can emphasize the importance at this point in time. So let's see how the market will play out here. As long as price remains below that descending trend line, we continue to hold on to a bearish bias. So this is my view here on the US oil spot. If you have any questions, I will be waiting for the next 10 to 15 seconds to see if there are any before we move on to the next financial asset. All right. So in the absence of no questions, I want to assume that we are all on the same page. Okay. So I want to assume we are all on the same page. So in that regard, we shall be moving on to the next financial asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, and in fact in the last 24 hours the pound is currently facing a downward pressure, trading below very important key levels. As you can see, since yesterday, price action has broken down three major levels that we identified here, and it appears that the dollar is gaining 7-haven appeal due to the increasing tension in the Middle East, as you will be seeing here. And one important thing about this structure is that we are going to be looking forward to the first German's Powell speech, which is coming up much more later today, and this will be giving us an insight into how this pair will be doing. But as in anticipation of that event, of course, we are going to be seeing some transition in price movement, which of course will be guiding our trading decisions for today. Now let's look at what the current structure is saying from a technical standpoint, and of course let's talk about how the week started for us here in this community. Now, one of the things we observed at the beginning of the week was the fact that price has been caught up within a range that is between the 1.22200 level and the 1.2125 area, which happens to be our key level for the week. And this all further emphasize that there is a level of indecision going on in this market, as price was confined within that range, and not until today that we just finally saw the breakdown of that key level at the 1.21250 to signal a potential bearish momentum. Well, prior to this bearish momentum we saw here, remember that we had an ascending trend line. In fact, we had a couple of them, but this was the major one we were using for yesterday's trading session. And of course, I did mention that considering the fact that we have been noticing higher lows within this range, that we might be seeing an uptrend continuation. But I made mention that I would love to see price break out of the 1.22200 level before I can start considering buying, because of the nature of that 1.22200 area, which has been a strong selling niche, as we have been seeing how sellers have been negating all attempt by the buyers to break out of that area. Then for the fact that we had an ascending trend line guiding our trading decision for yesterday, we mentioned that if the ascending trend line is broken to the downside, that we shall be getting ready to sell. And of course, we saw what happened here during the New York session yesterday. I think about a couple of hours into the New York session, we saw the breakdown of the ascending trend line for the first time this week. And for those who missed out on that opportunity, the market came back to retest the structure to confirm that move, and since then price has been dropping to the downside. Now if we look at what has been going on here since the New York session yesterday, you will see that we should be having a minimum of 3 positions running in profit right now. The first position here will be running with about 60 pips in profit, while the second position here will be running with about 30 pips, and the third position running with about 20 pips. So we have roughly about 100 pips running in profit at this point in time. Now the next thing we are going to be doing here, you know how we do it. Whenever price move significantly well in our favor, we do want to be moving our stop losses right now to secure this current sell position while we continue to monitor price action. And based on this current structure, I am of the opinion that anywhere between the 1.21375 and the 1.21250 area seems most appropriate to move all stop losses to. Of course, we do want to be giving enough room for price action to breathe here. So place your stop loss anywhere within that range, and let's see how far this bearish momentum is going to go as we continue to wait to see what the Fed chairman is going to be saying today. Now, with a well-secured position at this juncture, what is going to be our next line of action? Well, personally, since price action has broken down that our key level at the 1.21250, we have no other choice than to continue to maintain a bearish bias in that regard. So anywhere below the 1.21250 will make us feel comfortable in our sell position. And do we have a trend line we can use to guide our trading decisions for today? Let's see what we have here. So if we connect the series of lower highs since Tuesday's trading session, I think we have something to work with here. So we have a descending trend line. I think we have a couple of them actually. So let's mark it out on our chart, and as long as price remains below this trend lines, we shall feel comfortable in our sell position. So there are still chances that we can see price climb up into the structure where continuous selling pressure still has a potential of pushing price further to the downside. So I'm going into the London and New York session today. We are going to be maintaining a bearish bias, and the only condition that will make us start considering buying is for us to see price break out, retest that descending trend line. So we shall wait for that if that is going to be the case, but as it is right now, let's maintain a bearish bias in this market. And of course, if there is any significant development as we continue to anticipate the Fed's chairman speech, I will be giving you an update on both my trading view and Telegram platform. So these are my views on the GBPUSD. We remain bearish. We hold on to a bearish momentum, and let's see how far this is going to go. So if you have any questions whatsoever as regards to what I talked about, or you need me to do some further clarifications, feel free to let me know in the comment section. So 15 minutes off, use that time to mark out your levels, and let's see what is going on. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we move on to the last asset on our watch list for today's trading session. So the next asset on our watch list for today is the XAUUSD, and so far this week we've had a phenomenal move in price action, as at least we should be having a minimum of 500 pips in profit on the XAUUSD so far this week, as we were buying since Tuesday's trading session after observing the inability of sellers to break through the 1918 zone, which actually persisted for about 24 to 36 hours before the breakout of that resistant line happened. Well, let's see how the week started for us all in this community. Remember, initially we were looking out for selling opportunities after observing that the new week started on a strong bearish momentum, as you will see here, breaking down that 1918 level. So we were looking forward to price coming back to retest the structure to inside that downtrend move, and of course we had a sell position triggered, but unfortunately we saw how buyers took over the market around the 1915, and because of this persistent buy pressure here, we decided to manually close our sell position with a small loss. I think about 5 pips, 6 pips loss we closed on Tuesday's trading session. And during our live session on Tuesday, we were able to identify a couple of structures that we said we were going to be using to guide our trading decision. And in fact, the structures were all screaming bullish all the way. So what we did here on Tuesday's Wednesday's trading session was to consider this impulsive move that happened last week, and we saw our price transition into an uptrend continuation pattern, which could be considered to be either a symmetrical triangle or a pennant, if you would ask me. And because of this structure here, we decided that a breakout of this descending trend line here will be all we need to confirm an uptrend scenario. And as you will see, that level also shares a confluence with that 1918 level, and since that moment we have been buying this asset. So our first buy was around the 1918, and we had multiple levels that we identified on this chart to guide our bullish expectations here. So we kept on added more positions at breakouts of levels such as the 1923, 1927.50, the 1930, and finally yesterday we added one more at the breakout of the 1940, and I think we also had it during the XAUUSD live window, another position at the breakout of the 1946, and we had about 5-6 positions running before this bearish momentum came in to take us out of all the position. And of course, I do hope you moved your stop losses accordingly. And I made mention this morning that for those who still have a buy position running, then you want to be moving your stop losses to secure this current position, as anything could happen today, especially as we anticipate the Fed's German speech today. So there could likely be some volatility go on in this market. Now, the rise in the XAUUSD in the gold prices can be attributed to the escalating tension in the Middle East, of course, as everyone in the market will definitely want to be placing their funds in safe havens such as the gold that we have here. But there has been a little bit of twist to the fundamental factors from the US economic docket in recent times, like the hawkish Fed expectations, as we had speeches from the Fed officials in the last couple of days now, and the rally may be capped at this point in time based on these strong US bond yields, hawkish Fed expectations, which dovetails to a strong US dollar. And if this persists, we might likely be seeing a crash. We are going to be taking this into consideration too while we look at this current market structure. Now, from a technical standpoint, I made mention this morning that we have another level at the $1,951.50 level, that a breakout of the structure will be welcoming more buy position. And in fact, I do have a buy position triggered already, which is currently running in a loss of about 20 pips thereabout, and we are having our stop losses right below the 1946. Now, what led to the idea of buying that asset at that point? Well, if you look at the structure since the New York session yesterday, you would notice that as soon as price tested that high point around the 1962, we saw a sharp rejection. And this is a psychological peculiarity, especially when price finds a new high. It usually incites some level of fear, where a lot of people will want to start closing their position based on the fact that they hit a new high. And as a result of that, we could start seeing some choppy situation, some retracement, some consolidation phase, has majority closing some of their positions in anticipation to build a strong momentum to break out of that structure. And I think that is what is really going on in the market here in the last let's say 15-16 hours now. Now, despite the scenario, you will see that price had consistently found lower highs within the structure. You can see what we have here. That was the highest point. We saw a lower high, we saw another lower high here, and we saw another one right here, giving us that beautiful descending trend line, which we are going to be using to guide our trading decisions for today. Now, if price remains below that descending trend line, we want to feel comfortable selling, having a counter trend opportunity. But if price breaks out of that descending trend line, then we want to be thinking of buying. And this is the reason why I projected this $1,951.50 level here. Has a breakout of this level, would have broken out of that descending trend line already to capitalize on a bullish move. So that is why I said we should be buying there. However, for those who are new with us, you know that you can just buy there right away, as you do not have any profit to leverage on. This is only meant for those who are already profitable so far this week, who can afford to leverage at some of their profits to risk waters around that 1951 area. However, if you are new with us, to join this uptrend continuation, you want to see a breakout retest of structure before you want to be entering any trade here. So this is how we are going to be buying the XAUUSD today, anywhere above the $1,951.50 level. Then if price continues to climb new highs, breaking out of the 1958, we will be adding more buy position to our existing trade. So this is the only condition that will guide our bullish expectations for today's trading session. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers. You know how we do it in this community. We also want to take into consideration what opportunities the sellers also have too. Now, if you look at what has been going on here in the last 16 to 20 hours, you will see that we have been witnessing lower highs, and we already have a breakout of that descending trend line. It's still a possibility that price could take us out of this buy position, leading into a situation that could incite some selling pressure. Now, this is where this major ascending trend line we have been using since the beginning of the week now comes into play. Now, remember, we had this ascending trend line marked out at the beginning of the week, which of course had supported the current bullish momentum we are right now. So what happens if a retracement phase comes in here, that is profit-taking activities? Then I would like to see the breakdown of the 1946 level to incite a sell pressure, where I will be hoping that price will drop to as far as this ascending trend line to build another wave of bullish momentum to the upside, and this will be dovetailing to a minimum of 150 pips. And if price continues to the downside, that is breaking down that ascending trend line, then we will have no other choice than to continue to the downside. So it's very important that if price breaks down the 1946 and we sell, please let's be mindful of this trend line here. As soon as price gets into that structure, kindly secure all your positions while we wait to see how the market will be reacting to that trend line. And depending on how it reacts will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. But as it is right now, I still maintain a bullish outlook on this current structure. We still have price above our ascending trend line, and if price continues above the 1950 level, 951.50 level, I will maintain my bullish bias here, joining the uptrend. But if price breaks down the 946, we might likely be seeing a retracement into structure in anticipation of another wave of bullish momentum, or the breakdown will welcome selling opportunities here. So these are my views on the XAUUSD, and you will see how that zone between the $1,951.50 level and the $1,946 area is going to be playing a major role in determining the direction of price action for today. So you do want to be marking out this level, mark out that trend line, and let's see how the market will play out today. So a breakout of either of the support or the resistant line of this range will be giving us a sense of direction for today. So let's see how the market will play out from here, and trust me, I'm going to be with you on my TradingView and Telegram platforms to give you updates on how we are going to be managing this trade if any significant setup comes up on the chart. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds and see if there are any questions before we round off for today's trading session. And if you have found this content helpful and useful in making your independent trading decisions for today's trading sessions, I will really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact it also helps the YouTube algorithm to push and promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you in advance for doing so, and I look forward to seeing you guys again on my XAUUSD live window, which is coming up about 5 to 10 minutes into the New York session. I don't have the link right now, but if you are following me on this channel, you will definitely get a notification as soon as I come online, come on live for the XAUUSD. So let's see if there are any questions whatsoever before we round off this session for today. All right. So in the absence of no questions, I just take this as a confirmation that we are good to go this morning. And in fact, it has been a wonderful moment with you guys today, as we were able to attend to three major assets today, which includes the USOILSPOT, the XAUUSD, and of course the GBPUSD, all of which we were able to identify simple setups that we can use to guide our trading decisions for today's trading session. I see your comment, Ika's Diary. What do you think about today's Fed's Powell speech? Will it be hawkish one? Well, we don't know, until it speaks that we can know if it's going to be hawkish or not. But there are speculations that there could be some hawkish statements. So we understand that behind the scenes, before he gives a speech, his team will know what is going on, what he will be saying, and of course he will be having key players in the market who are also going to be getting involved in the market. And of course, as technical traders, we are going to be looking at the current market structure for signals that will give us insight into where price will be going based on the nature of price action prior to the Fed's chairman's speech. So we are going to be waiting for that, and of course I will be with you on both my TradingView and Telegram platforms to give you an update on what to do based on the price action we see on the chart as at that time. So I hope I answered your question. So let's see how that will play out like 31 hours before the Fed speech. Thank you very much, guys. For those who have clicked on the like button, thank you very much. I really do appreciate your support. And those who have not, please, I really appreciate your support. Give the video a like, give the video a thumbs up. And this is the only cheapest way you can support this project. Thank you very much as you do so. So on this note, I want to wish us all the best of luck. For those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you do, I look forward to seeing you same time tomorrow as we come here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. All right, you're welcome, Mbuso Sierra. I just saw your compliments. Thank you very much for your support. So on this note, I wish us all the best of luck, and hoping to see you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.